All right, guys, we are live. It's time to get the best freaking stock market live stream started. You had the S&P 500 down 0.8% today, was it? 0.6%. And you had the S&P or the NASDAQ, it was down 0.8%. You had the Russell 2000 showing a little bit of relative strength. It was only down 0.5%. So that's been a little bit of a change versus what we've seen over the past like 3 weeks, where every morning dip was constantly bought up. I mean, almost like just in nonstop fashion. You actually saw a little bit of panic from the 0DTE call buyers today. And for those who don't know what 0DTE stands for, it's your 0 days to expiration call buyers. It's option traders that are basically buying calls that are expiring the same day. They're very volatile. Most of them will go down to zero, but that's the game that a lot of people, especially a lot of novice traders, are playing right now. They're playing these 0DTEs. They got burned big time today. A lot of them were playing that 413 level. There was like over 280,000 contracts traded at that strike price before noon today. So it was crazy. There was a lot of volatility. And then you got the big sell-off at the end of day. You had a little bit of a buyback there at the end of the day, but nonetheless, it didn't go green. It stayed pretty much right where it opened up at, which has kind of been the name of the game too. When you do get a sell-off, it's almost like impossible to get a sell-off that goes below the opening price. But nonetheless, I got some American Victors here today that I'm doing the live stream on, and it's pretty good. It's what is this, a small batch here? Yeah, it's a small batch. Good stuff. I've always liked it. It's like mid-tier for me, but always good midweek drink. So anyways, what I'm going to do in this video here, or this live stream, I'm going to go through the NASDAQ. I'm going to go through the S&P. I'm going to go through the VIX, the Russell 2000, essentially the indices. Then I'm going to start looking at some of the sectors that seem to be doing well, some that are not, some that are kind of in between. I'm going to give you some of my thoughts on some of the earnings stocks that we've seen play out so far this week. Plus, we're going to look at some setups as well. I got a handful of setups. Plus, send me your questions if you guys have any. I'd love to hear from you. Hello to Tommy over there. So is this a live or premiere? This is a live. This is a live. I'm not doing any premiere video after this. This is just, I'm taking questions. We try to do these about once a week. Sometimes, much to my chagrin, I don't do the best job of doing them every week, but I'm trying to. Bear with me. I'm first a trader, then I do the YouTube stuff after that, because if I am not a good trader, there's no point in me doing YouTube. All right, so let's go ahead and look at the SPY here. All right, so a couple of things here. I'm going to go ahead and flip over to this tab right here. A couple of things that you're seeing here. Okay, you have this declining trend line that goes all the way back to August of last year. And we haven't been able to break through it just until this week. So we break through it this week. And then what happens is that we essentially just don't have that thrust that you would expect to get following a break of a major resistance level. And we also saw that with Apple this week as well. So you break through it, and then we come right back down and close just below that breakout level. So it's not, I don't necessarily want to say it's a head fake at this point, because I wouldn't say that it was a very strong breakout to begin with. It could very easily still push back higher, and nobody would really raise an eyebrow to it doing that. But for now, that is something to keep an eye on. Do we continue to drift lower and lower? As you can see, I mean, we keep closing higher than where we open up at, even on our down days. That kind of makes it frustrating from a bearish standpoint to be able to get any traction to the downside. What you saw today from an intraday standpoint, this sell-off here, and this is a 5-minute chart. We gapped down and we did the same thing like what we did yesterday, where you just steadily progress throughout the day. You just keep marching higher and maybe a little bit of profit taking at the end of the day. We got that same kind of price action here where we were marching higher throughout the day. We went on this huge surge, and then all of a sudden everything just fell apart and made new lows on the day before that final 10-minute ripper that just, I hate that last 15 minutes. I don't care if I'm bullish, bearish, or whatever. It's never favorable. It doesn't seem like that last 10 minutes of a trade, because usually it goes counter to whatever you were doing through the course of the day. So anyways, you got that 10-minute ripper there. Again, I hate that thing, but it is what it is. So you filled this gap, and as soon as we filled this gap, this is the gap that I'm talking about here. We opened up, we filled the gap over the course of the day, and then we just completely fell apart after the gap was filled. Market doesn't like the gaps. A lot of times you see like gaps get filled the same day. Market hates those things. So in any case, we sell off. This is call buyers, the 0DTE call buyers, completely panicking. They are not liking the fact that everything just fell apart on them. And so as a result, they're rushing for the exits. That premium that premium just deteriorates really, really fast, especially when you're in the afternoon, especially when you're getting a big move. It's selling that's basically creating more selling and more selling. And then the delta hedging that's going the opposite direction that was causing it to go up before creates more and more selling. And that's why you get this, what seems like a snowball's effect all the way downhill. And people are just basically running for the exits because the premium is vanishing as fast as you can ever imagine. So anyways, we got that with the SPY. You also saw that with the IWM. We saw that with the Qs today as well. But what sectors are holding up the best? One that really seems like it's standing out to me. We'll go to the daily chart here. Look at the staples. This is like your Costco's. This is your McDonald's kind of stocks. This is your Walmart, Waste Management. These are the stocks that do really good during a recession. People must be piling into it because look, the ETF continues to push higher. It's almost in a world of its own right now. Not a lot of people are talking about it. Why would they be going into staples? Because they're worried about a recession. In a recession, what do you want? You don't want things that people have to cut out of their lives because they can't afford it anymore. You want to be in stocks that people, no matter if it's a recession or depression, they got to have it. Waste management is like probably the best example. People need their trash still to be picked up. That's what you're seeing with like XLP, McDonald's, and stuff like that. In a depression, people are more likely to eat at McDonald's than they are Ruth Chris Steakhouse. So that's why you've seen so much strength in McDonald's of late. Then on top of that, you have a whole bunch of them like XLU. This is another safe sector for the most part. And when I say safe sector, it doesn't mean you can't have losses. It just means that these are sectors that people like to go in times of uncertainty. This is like your utilities, like your power companies, like NextEra Energy. So you have utilities coiling here just below the 200-day moving average. Then you have a bull flag pullback in the healthcare stocks right now. That one's caught my attention when I was prepping for the show today. So you have healthcare. That one's a bull flag. You have utilities. It's coiling right here. See that? It's almost like a little triangle pattern that has formed. Then you got XLK. And XLK, the reason why that one's so interesting, first you got this massive layer of resistance. This is all your tech plays. And you got no breakout here. It kind of almost sort of broke out back in late March, but it couldn't hold it. And then it tried it again just on Tuesday, couldn't hold it. And now we're stuck right here for like the 15th or 14th day in a row where we're just trading in a very tight range, trading above the 20-day moving average, but we're not breaking out or breaking down. So for healthcare, utilities, and tech, they're all coiling. They're kind of giving us like all right, which direction is these three sectors going to take? That's what we have to keep watching for, see how it breaks out of that coil. Then you have discretionary, XLY. And with XLY, you have what looks like a potential like bear flag like pattern here that's developed. So watch this one here. It's kind of getting a little bit extended to where it's like, all right, are we still calling this a bear flag because it's just taken so long? The flag's bigger than the pole at this point. That's what she said. So in any case, bear flag pattern here, starting to break down below the 50-day moving average. That could confirm to the downside. I'm not a fan of discretionary. This is going to be like your Amazons. This is going to be your retail plays like Dillard's. It's going to be like your casinos like Wynn. And then let's see here. The other one, XLRE. I think that might have been XLRE. You can see here, it had a nice trend line off of the October lows, held it pretty well. Then it broke that trend line. Now it gets like what it kind of looks like a dead cat bounce with a downward sloping 50-day moving average that's providing some resistance here to the downside. So these are all things that you want to be watching here with the different sectors. Let's look at QQQ. We're going back to the indices here. On the indices, we talked about before this triple bottom here and the Qs. You have this rising trend line off of the January lows, but guess what? It hasn't held yet. So you're like, or it has held, but it hasn't been tested in the better part of like a month and a half or so. So with all that coiling, and the coiling's taking place just above this key support level, two things need to happen. One, it needs to break the support level, and then it comes back down here. If it breaks this support level, then that's where I think you're probably going to see a test of this like 285 level here on the Qs. If it doesn't test that level, we're kind of up a creek. But from a bearish standpoint. That's because if it just drops down to 303, there's really not a lot of gains there to be made from a shorting standpoint, unless you're going like the leverage 3-to-1 or 2-to-1 stuff. From a 1-to-1, you might be able to pull off like 3%, but by the time it starts to bounce, you may only walk away with like 2% on the trade. So the Q's consolidating right there. Keep an eye on whether or not it can hold this purple support level or not. Then let's take a look at Bitcoin. I usually don't talk about crypto too much, but it's worth talking about here. If I can actually get the chart to line up here. Oh, well. This is the thing about TradingView that just drives me nuts, is because, let's see if it comes back here. There, it's still messed up. Oh, well. I don't use TradingView all that much, so sometimes it gives me fits when I'm trying to do it live here. But for crypto, it's pretty good. So this was the support level. If I could have shown it to you, it goes all the way back here. I have no idea why. There we go. I swear, between TC2000 that I use and TradingView, it's like the controls are completely opposite. But this is a big resistance level, okay? And then guess what? It broke through. Gosh, I hate TradingView. It broke through it here. It's just not very straightforward. Anyways, it broke through it, but now you can see we're up down about 2% today. Pretty heavy sell-off yesterday. We're back below that key support level. So be mindful of this. Worst chart I've ever seen. You know what? Just scrap it, because I'm tired of looking at this thing. TradingView needs to get their act together a little bit better on their charts if they want me to put these on YouTube. But anyways, we've talked about the sectors. We talked about Bitcoin. But we haven't talked about the VIX Volatility Index. And this has been kind of like the thorn in the side for the bears, because there's been no sustained rally in the VIX that would help the equities actually sell off. So you get here, and you can see going all the way back with about six days in a row here, we sold off. We're down into the 16s. We're in the middle of a banking crisis. Yeah, I know that all the politicians and all the Fed govs are coming out trying to say that, hey, we've put the pieces back together again. Everything's fine. We should have confidence. What else do you expect them to say? Like complete mayhem's about to ensue? No, they're not going to say that. Why? Because they can't create the panic. Of course, they're always going to say until the day that it completely blows up in their face that the banking sector is fine. And I don't think it is personally. Maybe it is better than what I realized, but I don't expect an honest answer out of them. I don't think they're going to tell the truth. So with the VIX, you got a little bit of a 5% pop today. This is like one of the few times that we've seen one other time really over the course of this month where the opening price was higher or was actually lower than the closing price. The closing price actually, the price on the VIX actually rallied from where it opened up at. Haven't seen it happen that much. It actually happened today. Okay, so the other thing too that I want to highlight, and this goes back to SPY. Look at the volume levels here, guys. Look at this. I'll draw a little circle or whatever around it for you. See, freaking A. There we go. None of these things want to work for me today. See how low this volume has been? And you can even go back further and see that it's been crappy too. I mean, all of this volume has been really bad, really below average. There are so many different risk events that could happen right now. You know, you have everything going on with China and Taiwan. You got everything with Russia and Ukraine. You got everything with the banking crisis. You have the Fed hiking rates still. They're going to probably hike at the next meeting. You have earnings season going on. There's a lot of headline risk out there that if one of these things hits, there's not a lot of volume to absorb all the sell orders that would come on from the institutions and from Wall Street. And so you could be looking at a major gap down if there's a major headline event that takes place. So keep that in the back of your mind. Now, let's look at a couple of setups here. We got some for you. When I say we, I mean me, okay? Double top here, right? Confirmed on Home Depot. And then you got this like nice basing pattern. And it tried to break out today. Let's go ahead and get rid of this line. It tried to break out today, but it couldn't hold the breakout. So you want to watch this going into tomorrow. Again, this is one of the main reasons why I use a top-down trading strategy in my trading, because if I'm going to get long on a stock, I need the market to be going in my direction here. Home Depot, great setup today coming into today, but the market wasn't cooperative. And so when you see the market not being cooperative, it's not really the best time to get long on a stock, because so much of what the market does influences individual stocks. So when the market started selling off today, it took Home Depot back down with it, which was once a really nice looking breakout, ended up being somewhat of a head fake there. So you still have it in play for tomorrow. It's not like the end of the world or anything, but I really like this particular chart here with Home Depot. AMD is another one that I've been talking about of late. You got these really nice this really nice channel on the stock. Okay, if I can draw it right, there we go. And so each time it's bounced off of this channel, and look at it, it's trying to bounce off again. 3 out of the last 4 days, it's tested it and it's held it, and it held it today against a very difficult tape. So trying to hold that rising trend line, if you can get that bounce, man, you might be able to see another move back to 102 if this market can keep its act together. All right, let's see. We talked about HD, AMD. Let's see what STNE has to offer us. Now, look at this one. Huge layer of resistance that goes way back, right? Hasn't broken out of it yet. Let me draw that a little bit tighter there. There we go. When I do these lines, I like to try to connect as many different price points as possible. So that sometimes might mean, okay, like right here, if I can zoom in way up here, you might see a little bit of a line go up there a little bit, or right there. Those are the shadows. That's just like the intraday extremes. So if I can get as many of the different price points on there, it provides me with a more clear understanding of resistance. And in this case, you got like a bull flag pattern that has developed just underneath this layer of resistance. So it's a really intriguing chart play. If you can get it to break out, put the stop loss down here below 11, and then it can break out above, let's see, probably be about like 1187. It's kind of exciting. So I'm going to be watching that one in the days ahead. You also have MU reported its earnings not too long ago. Really, it was a disaster of an earnings report. But again, kind of like STNE, it's got this nice layer of resistance that goes all the way across. And if it can break above that, that's where it becomes a stock and play. I don't think that's going to happen here in the next couple of days. But if you can get a move back above 64.43 with a good tight stop loss underneath somewhere down in here, that would be something that would be ideal for me. Let's see here. I have one more for you guys. That would be LULU Lemon. I don't know. I never know how you say that. Lululemon. I don't think it's lemon, is it? So you have resistance here, decline of resistance. And this resistance forms a nice triangle with support underneath. You got that breakout today. So check that out. That's a good breakout. Probably ideal stop loss would be somewhere below 356. So below the lows from 330, which would be last month. Let's see Tesla, man. This was the big headliner today. Tesla dropping 10% on the day. What I'm really watching for here, a couple of things. You got this little area of support right here. It needs to hold this level of support. If you zoom in enough on it, you can see it closed just below it today. That's a big problem for this stock, okay? So it's broke below the lows from March 13th. That's kind of a new secondary topping pattern. Like when we talk about topping patterns, you look at Tesla, for instance, here, you had this huge head and shoulders pattern. You got the left shoulder, you got the head, and then you got the right shoulder. Then it broke down, came back up, tested the neckline of this pattern, and now it looks like it's starting the next leg lower. That's not a good sign for Tesla, especially when you zoom out and look at it from the grand scheme of things. Yeah, I think it could go down to 99. I know people don't want to talk about that, but I think it's very possible, especially with some of the headwinds that we're seeing with this market right now. So that's Tesla. But another one that did actually pretty good, but kind of struggled to break out was LRCX. Look at this. Look at this beast here. You got some resistance here that's formed, like kind of like a head and shoulders pattern, left shoulder, head. And then you got this right shoulder right here. Managed to break out, but it couldn't sustain the breakout, very much like Home Depot. So you want to keep an eye on this one in the days ahead. Can it consolidate maybe a little bit more before making that next stab at a breakout? And then you had IBM. The reason why I bring up IBM is just because the earnings yesterday created a nice little pop, but it just faded all day. Essentially, it was break even. Didn't really do much at all. So in any case, that is pretty much what I have for you guys here today. And this is a tough market. I say that almost at every one of these live streams that I do. It's a tough market, and it's getting a lot of people in trouble. They're trying to leverage themselves. They're trying to add more to their portfolio when they should be doing the exact opposite. They should be trying to raise cash to wait for the right opportunities to get long. Zero DTE trading, high risk, highly stupid. I would never do that kind of stuff in my wildest dreams because it's such a high risk play with, yes, you can get some good rewards, but it's like this instant gratification thing. It's greed multiplied way beyond anything that we saw with the Wall Street bets crowd with GameStop. Okay, at least they were just trading equities then. Yeah, they were probably trading leverage as well. But the zero DT options trading, you're fighting just an eventual losing battle. You can be right on 10 of them, but if you get wrong on the 11th one, you're going to lose everything that you had on that trade. So you want to be on guard against not getting sucked into that kind of gimmicky type of trading. It's no good. So anyways, as always, make sure you like and subscribe to this channel here on YouTube. Make sure you're checking out my podcast, Swing Trading the Stock Market. It's on all your different platforms. Really good. If you guys like these live streams, that's also a pretty good thing to go with. And yeah, just keep liking and keep click the join button down below. If you want more of my stock market research, you can get multiple videos sent to you each day and lots of good watch lists and market updates, big tech updates. It's really good stuff. You don't have to just wait for one of these live streams. All right. That's going to do it, guys. Thank you. God bless.